So we're going to work on putting the financial statements together from this grid of activity that we've already recorded. First thing I wanted to do was fix this formula here. We added a row and I didn't update the formula. I can do it a number of ways. This particular way, I'm just going to drag it down to include it. Fix them all, even though it only really applies to the two that had activity on that row. Okay, let's create the financial statements. I'm going to start a new tab. I'm going to rename it and call it Financial Statements. Let's start with the income statement. So for sales, we had two kinds of revenue, really. We had sales for the product and we also had shipping fees charged. And then for expenses, so I'm just listing them all here. I guess you don't have to listen to me type. I'm just going to list them all out, and then we'll be pointing to them on the other sheet. So there's the line items as I remember them. We can always adjust them if we change our mind. But now we'll go ahead and grab the amounts that we need. All right, sales. We can go back to the sales tab. The shipping fees that we charged our customers. And so the total revenues would be both of those added together. Okay, cost of goods sold. Let's go back over here. Seeing as postage is not spelled correctly, why don't we change that to shipping expense? Clean that up a little bit. Not that we would actually show a client that. We clearly would not. So I guess we don't need shipping costs and postage expense because they're the same. Okay, let's go get rent. And then entertainment. Here I'm going to add all three of them up, plus, 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 and then hit enter. Phone expense. So you can see how I'm just gathering them up from that column. And then we can double check our answer to be sure that we balance back to the profit that was in our transactions grid. Does it match? And it does. Great. So there's our mini income statement. Now let's make the balance sheet. I'll go ahead and create the line items. You don't have to watch me type, and then we'll grab the numbers together. There we go. So I've got it set up now, and I can point to the numbers on the other page that will populate my balance sheet form here. Oh, I've got cash and accounts receivable on the same line. Let's break that up. Okay, I think we're ready to go here. So cash plus and point at the ending balance in cash. Accounts receivable plus and point to the ending balance in accounts receivable. And you can see how we're just populating the balance sheet by just pointing at the ending balances in these various accounts. There's all the assets. Add them up. And then our liabilities plus equity down here has to equal that, or else we have something to go fix. Okay, let's do the liabilities. I broke those two into two different lines on my balance sheet. So I put that in AP, so I don't need that line. We'll just get rid of that. Okay. Total liabilities. And then capital. There was no initial capital put in by the owner or owners that we know of, but the profits for the period would have been added to the capital account. Okay, let's see whether or not our balance sheet balances. And it does. So now let's put together the cash flow statement. So I have set up for a direct method cash flow statement. That means that we indicate what the deposits were and what the payments were, rather than reconcile net income to operating cash flow, which is a little bit more advanced and probably not needed for this project, because the purpose of the financial statements is to study the business and to figure out what's going on, rather than to present it to the client or present it for publication to outsiders. So what was collected from customers? Let's go point at that. Add them all up. And then payments to vendors. Let's go add them all up. Payment for inventory, payment to the postmaster, two payments to the landlord, more payments to the inventory, payment to the Chinese restaurant, inventory, restaurant, Bell South, Home Depot. Those are all vendors. And then so I added up all the payments that we made to our vendors. The people we're buying inventory from, Bell South, Home Depot, the accounting students that we're helping, the employees, and so forth. Okay, so then the net outflow from operations is negative. Now there weren't any investing items. What are investing items? If the company bought or sold any long-term assets, or if they bought or sold any investments, that would be maybe stocks and bonds of another company. And there were none, so there's nothing to put there. And the only financing activity was a loan, and so we have inflows from that. Okay, so the net cash flow for the period should, since we started with 0, should be our ending cash. If we had started with something else, then the net cash flow would be the change in cash. Okay, so there are the financial statements. Now it's time for us to digest this and go back to the questions that were posed in the case and try to help come up with business advice based on what we have here in front of us. And we'll talk about that in the next video.